Welcome to Crypto for the Rest of Us. 6 days a week, excluding Sunday, I bring you a tip, a tool, or a crypto analysis. I'm a huge believer that we are just at the tip of the iceberg when it comes to blockchain technology and how it can apply across many industries and every facet of our life. So today, I'm just going to go over something very briefly that you may not be thinking about. Let's say, for example, that the current market plays out the way it has in the past. It may not. I always have to say this is not financial advice. But in the past, the bull market takes off fast, furious. We hit all-time highs. Coins go ballistic. Then we turn around and we have a bear market and prices come down significantly. So here's the problem with that. Not that that's a problem, of course, if you sell and take profits, but that's the issue, selling and taking profit. If you believe, like me, that many of these are going to come down pretty sharply, then you might be inclined to sell the majority of your crypto, and that may all happen in 1 year. Tax consequences, right? Well, what do a lot of people do? I shouldn't say a lot, but what is a common practice when you hold stock? Let's say it's a stock that you know you can hold for the long term, and it always over time seems to go up. Maybe an Apple or a Google or a Microsoft or something like that. And they just go up and up and up over time slowly. So you know that if you sell and take some profit now, maybe you do 100 shares out of your 1,000 shares, whatever it is. And then next year you take a little bit, and the next year you take a little bit. So you're spreading out the tax consequences. In crypto, you may not have the luxury of holding, thinking that the crypto is going to continuously go up over time. Maybe Bitcoin and some of these other things, yes, but some of these altcoins, you don't know if they're going to be around. Maybe there's more competition, whatever it may be. So what I want you to realize is when it comes to the stock, what a lot of people will do is hold the stock and take a loan against it. That way they get to hold the underlying asset. The gains aren't taxed because they haven't sold it. They just take a loan against it. You can do that with crypto. You can lock up crypto and take a loan against it. However, if you believe this crypto is going to drop pretty fast, well, they have loan to value. How much can you take out based on how much did you stake and tie up? And then there are requirements on loan to value when it comes to liquidating. So if those assets go down significantly, they might start liquidating you. Okay. What does that all mean? Let's take a look at Aave. Aave says here, I believe it's $20 billion of liquidity is locked in Aave across 3 networks. Huge network, right? You can supply, stake, and borrow. Let's launch into the app, because what I've noticed when I've been looking at Aave is that, and you can choose, if you haven't used it before, I'm not going to talk about how it works at the moment, but you can choose all these various networks. But essentially, let's look at assets to borrow. If you notice here, the interest rates can vary greatly. But what's most interesting is, and let's just jump into one like Chainlink. So you look at, here we are at Chainlink, and it shows you the loan to value. And so that means that it says 53%. Let's just call it 50%. So if you wanted to take a loan, you would have of $50,000, you'd have to lock up essentially $100,000. All right. So you can only take out half of that. On 100, it's 53%. It'd be $53,000 you could take out as a loan. So that way you wouldn't have to sell the underlying Chainlink because you might have a big profit. Now the liquidation threshold, 68%. Okay. So, and there's a penalty of 7%. So they're going to liquidate you if all of a sudden your Chainlink starts to come down and it hits this threshold. So we're only talking about 53%. Chainlink, it's a good asset. Will it stay at a high rate and continue to grow, or will it have a dive in a bear market? We don't know. Let's look at, and I've gone through all of these, and most of them are like Chainlink, meaning a 50% high liquidation. Ethereum is the one. And I'm just going to say from what I've seen, it stands out. Loan to value of 80%. Liquidation threshold of 83%. So you can take out 80% of the value. Lock up $100,000, you can take out an $80,000 loan. Ethereum, Bitcoin, in my opinion, obviously the 2 largest market caps. I would call them the 2 first mover advantages. There's nothing like Bitcoin. Nothing comes in comparison. So therefore, everything else is called an altcoin, including Ethereum. People will tell you why Ethereum isn't that great and the gas fees are too high and you don't really know what the costs are going to be. They're variable costs. They'll tell you all these reasons why Ethereum's terrible, but it is a huge market cap. In my opinion, of all my coins that I may hold on to a decent chunk of the Ethereum because I think over time it will continue to increase. I don't think it will decrease as much as other coins. If they're losing 80%, maybe it only loses 50%. I'm not sure. I probably wouldn't take out a loan of 80%, but I might take out a loan of 20%. Look, the liquidation threshold is 83%. So you can hold your Ethereum for a longer period of time. And I wanted to point this out because as you look at your assets and you're trying to time whether or not you need or want to take gains, a lot of these other coins have competitors, and they're always going to have competitors popping up. But something like Ethereum that's been around for so long, and there's so many things built on this, on top of this, in my opinion, this would be the one if I wanted to hold for a longer period of time, and I didn't want to take gains. I'll take gains in everything else, not in this, and keep it so that I can also take loans against it and not have to pay the capital gains on those gains. That's my tip for the day. Take a look at Aave. You can go through all of the various coins that they'll allow you to use as collateral. You can't use everything. It depends. Just take a look. But Ethereum stands out, in my mind, as the best if that's something you may want to do. Thanks for watching. Have a great day, and let's make generational wealth together with crypto.